Thanks to a booming stock market and real estate values, household wealth is higher than ever before. Let's dive into it. Hey guys, welcome to the channel. Frank Talks Money. Real quick, I just need one favor, guys. Remember to smash that like button. The more likes the video receives, the more the algorithm will share the video with more like-minded people like you and me. Now let's get right into the content. Household net worth, the sum of all assets owned by American households, is up, and we mean way up, to a new record high according to the Federal Reserve. In the third quarter of 2024, household wealth grew by $4.8 trillion to just shy of a total of $169 trillion combined. That's primarily due to stock market gains and rising real estate values. The increase doesn't seem to be cheering Americans up as a whole. Consumer sentiment is still pretty meddling, but it probably is helping keep us the spending going. There is a name for what happens when better off Americans see lots of plus signs in their brokerage accounts and in their 401ks and real estate values. It's called the wealth effect. Are you benefiting from the wealth effect? Guys, if you're still here, hit that like button for me, please, guys. Remember, show me some love. Hit that like button for you, boy. We have had this gradual, consistent increase in both home prices as well as the stock market that's led to people spending more money as a whole. These gains haven't been evenly distributed. Take stocks, for instance. The top 10% of Americans owns roughly 90% of all equity stocks. So that's a very disproportionate gain. Still, more than ever, Americans are getting a bit of a bump as the stock market rises, the Fed said. Stock ownership certainly is much more broad today than it was 20, 30, 40 years ago because of the advent of 401ks. Now, there is a risk here. Consumers could count on their paper assets to bail them out if they were to overspend. It is true, credit card debt hit a new record high in recent weeks, but so did household assets, total income, because of the labor market and the stock market gains, the Fed said. Americans' debt to assets ratio is now near a multi-decade low. The lower the debt ratio, the better it is for American consumers to keep spending without having to worry about how they are able to afford it. So guys, as I talk about the stock market and real estate, I want to let everybody know I am not a certified financial planner. When I talk about stocks and investing, I am just talking from my personal experience and what I think individuals should look into doing for themselves. I've been investing, guys, for over 14 years, right? Started investing when I'm 52. I started investing when I was about 37, 38. So I've been investing over 14 years. I have a 401k through my company where I invest in the S&P 500 index. I have two brokerage accounts. I have one brokerage account through Vanguard to where I hold the total stock market index fund. And then I have a brokerage account through Fidelity where I now invest in Bitcoin. That's what I do. Guys, if you are not an investor, if you are not an active investor, you need to look into becoming an active investor. If you are going to become an investor, you need to be investing for the long haul. People tell me all the time, I don't invest into the stock market because I lost money. Well, you must have gotten out of the stock market when the stock market is down or went down. Guys, if you do your homework, we already know Every time the stock market goes into a boom, there's going to be a correction, which means investors are going to probably take profits, or the stock market needs to reset itself because it's getting overvalued. But see, if people would do their homework, they would know this instead of getting scared when there's a 5% correction or a 10% correction, then they get out of the stock market. If you do your research, you would know that these events happen in the stock market. Like I already know that there's going to be a correction soon in the stock market and it's going to drop 5 or 10%. I know this. So when it happens, I'm not going to be surprised and it's not going to run me away from the stock market. But this is because I've researched the stock market. I have studied the stock market. I know the history of the stock market. So these little bumps in the road don't scare me off. I wrote out high inflation in the stock market. I wrote out interest rates going up in the stock market and the stock market plummeting from both events. I wrote out COVID back in 2020, didn't make a move, stayed in my position because I know there's going to be some unforeseen events that's going to happen to where the stock market may plunge 10, 15, 20, 30%. But that's how you make your money, by staying invested for the long haul. You don't get out. I have made a shitload of money in the stock market. Right now in my life, I could not imagine not investing in the stock market. And I want to touch on what they're saying about real estate prices going up in the stock market. Guys, this is not just homeowners, having their net worth go up because of, their value of their home going up. Also, individuals that are investing into the stock market. Individuals that have invested into real estate. Real estate investors are reaping the benefits also, whether it's commercial real estate or private real estate. You know, single family homes, apartment complexes, duplexes, things like that. Those investors have seen their value of their real estate go up, and they're reaping the benefit to their net worth. So, guys, I implore you, if you're not an active investor, you need to figure out a way to become an active investor in the real estate, guys. In real estate or the stock market. My thing is the stock market. That's what I love. Some people love real estate, and that's okay. You have to do what you are comfortable doing. You have to invest in what you are comfortable investing in. Besides my primary home, I don't hold any real estate. I don't get all warm and fuzzy about real estate. I love the stock market. That's my thing, the stock market. Real estate could be your thing, and that's okay. The stock market is my thing, and that's okay. That's what I put my money into. So, guys, you got to figure out how you want to invest, but I just implore everyone to start investing. Guys, life is going to continue to get more and more expensive. And if you are just dependent upon a paycheck, you are going to get left on the side of the road. I'm telling you have to have more income or more access to money than just your job. If you don't, you are going to get stranded on the side of the road with no one to help. So, guys, that's my talk. Came across this article, wanted to get it out to you guys, let you know why household wealth is increasing. Please remember to like the video, share the video, and most important, please consider subscribing to my YouTube channel, Frank Talks Money. And with that, guys, remember, financial decisions you make today will affect your financial life tomorrow. Thanks for tuning in. Frank Talks Money. I am out.